Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, October 10th, 2023. It is 11:44 a.m. Eastern Time, so I'm starting the video, and want to get one out there to do a brief update on the equity markets, the euro, and the things that are related. So that's really the big ones are the euro and Treasury bonds right now, Treasury bond yields. As I said, we were getting quite a bit overbought, had some divergences, and so we're still seeing that abatement in yields, which tick for tick is bullish for equities as long as that continues, and or at least has been so far. Let's get into the charts and we'll take a look at what to watch. All right, so the euro, of course, I've highlighted the very tight positive correlation between the euro and the stock market, which is basically an inverse correlation to the US dollar and stock market. So you can use this euro US dollar pair that I use here. So recently I highlighted the bullish PPO crossover, and you can see, as I covered yesterday, you get these bullish PPO crossovers. There's one there, and it's not, the purple line's not there. And that gives you rallies. They come from there because the euro rallies, and therefore the stock market rallies, because that's been the correlation now for the last couple of years at least. Anywho, I wanted to point out that we are now, from the chart I've been sharing here, this is my main board, I have parallel downtrend lines. The lower, which has been taken out, that one allows for a violation. You can see right here, let me zoom in real tight. This is the primary trend line right here. I'm going to move it in just a little bit. There it is. That makes it nice and clean. So you come off the highs right here. That's the July about 17th, I think, or so, 16th. And you come down, you capture these two candles here, and that's where we're at now. So we're at resistance, and also you can see here I have a horizontal resistance level I've had there for a little while as well. So that's probably going to at least give us a reaction here. And a reaction in the euro, I define a reaction when you're going up as either pullback or consolidation. 60-minute chart, I don't have a whole lot, but I'll put a line here. I'll just drag down one of these upper lines that we had from before. And yeah, I think this is resistance. I see a couple reactions here, then a breakdown. It was impulsive, tried to back test it a couple times, and there we are. So that's it. So breakout much above there is also going to take us above the downtrend line, but I'd favor a reaction here, at least pull back. And I want to say that I'm pressing, and I actually just increased shorts. I'm giving them a little bit of room right now for a pullback trade. Why? Here's QQQ. QQQ is at, especially on this daily chart, this resistance level here, it's about 370.80. And you can see it was support back here for a while. Then when we broke it, you had a big impulsive red candle. It was support right here. We broke it, went down, tried to back test several times, failed. Tried to back test it a couple days there. Hard rejection on the second day. Finally, a big green breakout candle, reaction high. You can see plenty of reactions. So you have both price resistance there and downtrend line resistance just above. So although I have made the bullish case in the last few days and been long into yesterday when my price targets were hit in the indexes, I'm increasing the shorts now for a pullback trade, which should be deeper than it would have been yesterday had we stopped. I'm referring to, I gave you targets on the 60-minute chart. These were the previous ones from, where was it? Just yesterday. Oh, that's what it was right here. Yesterday I gave you, I think it was 366.77 was comparable to the target in the futures. And then these were the targets from back here, reversed along here, hit the top of the gap, was the first target, pulled back, and now that was T2. You can see these are resistance levels as well. So you have both the price resistance, which is basically what I just showed you on the daily chart there. You can see it carries through here. Quite a few reactions, and then the downtrend line, which is a big one. I think a lot of eyes are going to be eyeing that downtrend line. Maybe we go straight there. I doubt it. I think we're going to pull back before then. Logical pullback to this T2 level. Resistance, once broken, becomes support, and that would give us, for active traders, a good 1.25% or so trade. And more so is really the posture of the FANGs, the big market-leading Magnificent Seven. We'll just go through those real quick. You have Apple, Apple, this is my primary board here. Really good resistance level here, especially recently. Look at all these candles that we've had here. It's about 180 or so, and that's resistance right there. If 180 just gets punched through without much of a pullback, again, I favor a pullback to at least this 176.15 level. But if we punch through there, you have the primary downtrend line just above. I'm going to tweak this as I zoom in. I just want to get my lines nice and tight. Let me do that. Let me fix this line here. Come in. There it is, touching the high of that candle right there. And so there's your downtrend line. So either way, this is resistance, price resistance. Apple, all along, like I said, one of the better looking of the fangs with clean positive divergence, meaning both the PPO RSI, nice clean separation in between the troughs there, and nothing but green sticks so far, other than that one little about flat day right there with a red doji candle. And but again, getting a little stretch in the near term, and then more so when you look at the 60-minute chart here. You can see that was the last trade. So let me go to right here. This level here, I have 2 lines right here, that's roughly 180 right there. And again, I just see lots of reactions. I see these distinct reactions here. I see a gap right here. I see reactions there. And so that's it, guys. Now, look, works 2 ways. Resistance is resistance until and unless taken out. If clearly taken out, then that opens the door to the next level. We're not super overbought or anything like that. Not even, we're at the 72 level on the RSI on here on the 60-minute chart, but that's not my level for Apple. My level, I create my own line. I have it right here. I'll put the price level. Should be there. I don't know why it's not showing. Oh, I know why. Got to do this. Either way, I don't know. It's supposed to show up there. I tell it to show the value. I tried it there, and it's that purple line, and I can hover and tell you it's about almost 84. That's where, to me, Apple becomes overbought, and that's where the pullbacks usually set in from. So, however, that's also in an uptrend. That's typically where you get those levels. And so I just want to point that out. Sometimes a reading of 70 on the RSI does the trick. You can see I'm just circling those levels there when we were at the 70 level. So that's it. We're at resistance. We are overbought at least to the 72 level, a little bit above the 70 on the RSI. And this is Apple, of course. That's why I'm spending more time on this than the others. You have, of course, downtrend line off the highs and all that other stuff just ahead. Daily chart, Microsoft. Key levels here, downtrend line off the highs. Oops, that's not my trend line tool. This is downtrend line off the highs. We're right there. Microsoft at resistance. It had positive divergence like Apple did on the PPO, but it did not have it. It made a slightly lower low on the RSI. That's why I only show it there. But either way, most important thing, like all these big things, they've held my purple lines. They haven't taken those out yet. And as I said yesterday, support is support until unless broken. And they've been resilient in spite of everything that we've seen the last couple of weeks. So that's it. Like I said, right now I think the odds are elevated for reaction. I'll go over a few more. I'll just do each one on the daily and 60-minute chart, all these big key Magnificent 7 stocks. Microsoft right here, about 330, big level, support, support, support. Broke that support, back tested, failed, got above it, and then it was support, support, support. Support once broken becomes resistance, and then here we are. So pretty decent level, and if they pop that, the next one's going to be around right here, roughly that previous reaction high. I see some levels there. But again, I think we'll get a pullback, and they should all probably measure about the same at least. Well, this one's, the first decent support would be about a 2.5% drop on Microsoft. And we could certainly see more. Remember, we've had a lot of bearish developments on the longer term time frames, even these 60-minute charts. You zoom out here and the big picture says Microsoft put in a divergent high here, and then it broke this trend line here, back tested and rolled over. So I'm very much open to the fact we could have a deeper pullback and even undercut those lows and head on to those longer term targets. But again, all comes back to the daily chart. I've got price alerts set on all these purple lines, or most of them. If they go, then that's where the odds are going to sharply increase, that we're going a lot lower. and hit these longer term deeper targets in Microsoft like 293.60, and then this primary uptrend line right here that comes all the way back to 2017 or maybe even longer. Alphabet, remember, beautiful bearish rising wedge yesterday. I highlighted, I'm sorry, it broke down here, big gap down, and we're right back testing that previous reaction. That's a major reaction high, 52-week high, and we're right there testing that now. And you have this little minor wedge or minor uptrend line just below. So it's another one at resistance. That's what the theme I'm trying to get out to here. Amazon also has some resistance right here. Not super duper, but it's decent. Around, just tighten that line up, around 131, give or take right there. And you could probably see it better on the 60-minute. Yes, you can. There it is. So you can see it was resistance, 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 pop, breakout, back test successful, failed it, resistance again, resistance. Went through it a couple times right there, but not a lot. I see enough reactions certainly there to validate it. And more importantly are the recent reactions. Support, support, rallied off that support, then a gap down below it, tested from below, hasn't been able to get above it since. So there it is. So another one at or very close, a little bit of upside if it wants to carry up there all the way to about 130, 155. And NVIDIA. Let's look at NVIDIA on the daily chart. Again, NVIDIA has been strong. It's held both the my purple lines. When I say both, there's really three. The uptrend line right there, which comes in together right now with that 375. That's the bottom of this massive gap right there. That gap is probably the most technically significant gap in the entire stock market right now, or most significant technical level, because NVIDIA did that, and it just kind of said, I was on vacation. I remember it's in Hawaii when that happened, but it just set the markets ripping and everything. And QQQ broke out. Everything ripped up with NVIDIA on that gap up. It was an earnings-induced gap, and then everyone just kind of, the naysayers of AI and everybody just kind of bowed to the king here and said, no, NVIDIA will be going up forever now. And so, again, my point being, it's technically significant, but also I think psychologically significant as well. So, and we're well above it. So let's not, again, we're not even at risk right now of breaking the important levels. But and the reason I do these videos, we do have resistance here about 461. It's not super duper, again, resistance, but it's decent, mild. And more so, you have support. You have a pretty clean trend line forming just below. So that's what you want to watch on NVIDIA. I have this steeper one here. This gives you a wedge, a little even negative divergence here on the 60-minute chart. So if this minor trend line goes, then look for this secondary trend line to come into play. And if that goes, it's probably going to send NVIDIA back all the way back down here at about 404. So that's, again, the 60-minute chart here. A couple more. Tesla. Tesla probably best, well, Tesla remains below its bear market downtrend line. This is the bear market downtrend line. There's the all-time highs. Been moving lower, getting rejected at each and every time it tries to test this trend line. Boom, boom, boom. And, obviously that's going to be resistance again. If taken out, then that's bullish, and that would take you up to the next resistance level there, about 316.50. But as of now, we're well below it. And there's also a little minor uptrend line, just like NVIDIA, that you might want to watch, set a price alert on. Meta, this is a busy board of Meta, meaning I have a lot of lines here. I'm going to zoom in, and I need to fix this line to put it right on those previous highs right there. So you see 1, 2, 3, almost that fourth candle there, right about 326.50, and there we are. So I sound like a broken record, but the way this works, the more of the market leading stocks that I have running into resistance at the same time, the more likely you are to get a reaction there. If it was just Apple or just Meta or just NVIDIA, nah. But pretty much all of them are right at or near resistance. So that's why I'm giving, give a little bit of, little room on the stop this morning if you want to short a pullback trade on the NQs. So I'm still, until these guys get through there and do it with conviction, then I'm going to stay short for a pullback trade. That in this one, I need to measure it out. It's going to be about be a good 5% if it pulls back to this 310-ish level. be about I think roughly, yeah, about a 5-6% drop. Broadcom, AVGO. Let's just look at the daily chart. Not really, not much to say on this chart. I don't have a strong opinion other than it's still above my purple level. These are the key levels here, 787. And it's just in a multi-month trading range. This stock's gone nowhere like a lot of the market leaders for months now. So Costco, negative divergent high right there. And but that's it. Now we're out of the Magnificent Seven. So let's move on. What else? Gold, silver, doing well. I gave you some price targets last week on gold and silver. I think I gave them to you on this board right here. Yep, I did. We already hit my first target. Remember, right off the lows here. Put these out as trade ideas on really good support on gold and silver. Gold at 168. So, nothing big so far, but we hit the first target for about a 2% gain. It went up about another percent from there, and it's above T1. So if we pull back, you have a gap here. Anywhere in there is a objective add-on point, and that should take us up then to T2. Silver, SLV, gave you these three targets. Again, we went long somewhere here around right off around 19, a little above there. And, hit that first target for a 4% gain. I always say, if you're bullish on gold, buy silver or GDX. You're either going to be wrong or right on where gold goes. And these guys follow it, and they just go up in a higher percentage than gold does almost all points in time. So there it is, double the profits to T1, then went up another, 2% from there, just like gold went up another 1% past it. So it's almost a 50% juice, or double, if you will, actually 100% juice on it. 2 times the gain so far. And that's it. So next target here is 2020. Maybe we drift back a little more, back to that, maybe not. And then my max bounce target at this point in time, max bounce target is 2050. And that's it. Let's just stop it here so I can get the video out to you. This is IEF, Treasury bonds. They were down today a little bit, but rallying. Remember, when bond prices go up, this is the 10-year bond ETF, the yields are dropping. So that's bullish for the market. But again, I'm more so looking at the big fangs that resist. I can see some more upside here. Expected a little bounce trade, position for it. But I'm not married to this trade. But if that's where I think we go most likely. If we do, that would most likely also carry us to that downtrend line on QQQ. So to kind of summarize my thoughts as I wrap this video, here's what I think will happen. We have a lot of stuff at resistance, get a little pullback today, maybe get back in along and milk out that last another hurrah up there to that downtrend line in QQQ. Again, that's the primary trend line right there. And that's it. If anything changes, I'll let you know. Trying to think. Commodities, coffee's still looking good. Wheat and corn, they're setting up. Like I said, they've been setting up with active support with divergences, but they just can't catch a bid, those two. Coffee's right now probably the best looking. I think I got that out to you about a week ago. This is a chart I gave you, KC. Unfortunately, there are no more coffee ETNs out there. JO, they retired. Barclays shut down a lot of their commodity tracking ETNs recently, and JO was the only one I knew. Other than the old delisted JOFF, too thin, I'd stay away from that. So it's either, to me, coffee futures or nothing, unless somebody knows the one. But that was at T1. Oh, because that was back here. That's right. We threw it out here. When we hit first target there, and we made a marginal new and still divergent low. That's what's going on there. So and we popped that previous reaction high today. So we now need to power on through there. Remember, T1's already been hit right here. So if we go up there, I think there's a decent chance we can go on through there and hit T2 and then T3. All right, I will wrap it up here. Get the video out to you, and we'll see what the market does today, and we'll pick it up. If there's anything interesting by the close, I'll do another one. And if not, if I see any individual trade ideas, I'll get those out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.